I'm good on my side. Thank you for joining. We're going to look at the question paper for 2023. This is June 2023. This is the last question we're looking at for cash flow statement. So after this one, I think we need to move on now to another topic. We've been on the cash flow statement for too long now, and I think we've covered everything that we needed to cover. We still need to go and look at paper 2, some of the things there. So for now, I think this is the last time I'm doing cash flow with you guys. But maybe later on, closer to the exam day, we're still gonna come back just to revise. But for now, I think we've done enough. So we're going to look at this question number 2, retained income notes. We need to be able to master this note because most likely they will ask about it, or even share capital notes, they can ask you. Cash flow statement, we have to know how to do cash flow statement, and then the financial indicators. Even though I'm still going to work more with you on the financial indicators, but you must know that some of them you'll find them there within the cash flow statement, especially where they want you to do some calculations. You don't need to interpret them, but in terms of doing the calculation, which means you need to know the formula, and then after that you will be able to calculate. Otherwise, they don't really ask you to interpret those financial indicators. There will be a question specifically for financial indicators, and that's where we will need to interpret them, and you will not have to calculate them. So this one, because it's not really about financial indicators, this question is for cash flow statement. They just add them for you to just do the calculation, and then after that, we are okay. Okay, the information relates to Swallows Ltd for the financial year ended 28 February 2023. If it ends on the 28th of February 2023, when is it starting? What is day 1 if it ends on 28 February 2023?
1st March 2022.
1 March 2022. That is our starting point all the time, guys. That is our starting point. Okay, 1 March 2022. Okay, this is our accounting period. Let's carry on. So what is required here? We are required to prepare the retained income note for the year ended 28 February 2023. They want the retained income note. That is the first thing that we're going to do. And this is 9 marks for free. You need to take these 9 marks. These are free marks that you guys need to collect, making sure that all the marks that are on the paper, the plan is to collect everything. Number 2, calculate the following figures for the 2023 cash flow statement. Change in loan, sorry. This is just 2 marks. So which means now a quick calculation. You don't need to do a lot of calculations. It is just 2 marks. Taking the opening balance minus the closing balance, that is a change. And then you check whether it's an inflow or an outflow. That's the only thing they expect from you on 2 marks like this. You need to, when you look at the mark allocation, it tells you how much time you need to spend there. So I'm not expecting you to start doing a T account here and spend more time. No, just take the opening and closing, and then you're okay. Proceeds from shares issued. 3 marks, not a lot of calculations are required as well. Quick calculation, then you're done. 2.3, complete the following cash effect. Complete the cash effect of operating activities section of the cash flow statement. Cash flow from operating activities, you need to know the format. Cash generated from operations, we have interest paid there, we have dividends paid, we have tax paid. Those are the things that they want us to do. And this is 10 marks. You see, this is another free 10 marks that we need to collect. So I'm expecting you to spend more time, 2.1 and 2.3, because that's where there is more marks. 2.4, calculate the following financial indicators. You see here, you're just doing the calculation. You don't need to interpret them. Current ratio, very easy, simple and straightforward. You need to know the formula. You can even see here, this is 2 marks. So which means now 1 minute on this question, you're done. 2 minutes, you're done. You don't need to spend much time. Net asset value per share. Net asset value, that's what they want us to do. They want us to calculate the net asset value. So we need to know the formula. But usually here we're looking at the net asset value per share. That's what we usually calculate. Okay. net asset value per share, because the net asset value here, we're talking about the equity. Equity is the net asset value. But usually what we're calculating is a net asset value per share. And then percentage return on total capital employed. This is ROTE, another financial indicator that we will have to calculate, more similar to the ROCE, the one that we did previously. So we're going to do a calculation for this. Note the average total capital employed is 20,343,000, which is provided to us. Now we go straight to the information. So this is my spreadsheet. This is where we're going to do our retained income note and then change in loan cash flow. And then we're going to do the calculations. Here, we're going to do our workings if there is a need for that. So this is where we're going to do our workings. Okay, let's go straight to the information. Extract from the statement of comprehensive income, they gave us sales, 12,754,500 rands, depreciation, 116,500, interest on loan, 648,000 rands, net profit after tax, right? It is 1,526,000 rands. Then they're telling you here that tax rate is equal to 30% on the net profit, right? So which means now, since they're saying the tax rate is 30% on the net profit. So this one, since it is net profit after tax, so we need to be able to calculate the income tax here, even the profit before tax, we should be able to calculate that. Okay. Extract from the statement of financial position. On 28 February, we have ordinary share capital. They gave us the opening and the closing balance. Retained income, they gave us the opening, no closing balance. This is the one that we're going to calculate on the retained income note. Loan, Daisy Bank, 7.2, 6.3. We're just going to take the difference between the two, as we said before, to see the change in loan, the movement. Okay, total current assets, they gave us the opening and the closing. Total current liabilities, we have opening and we have the closing. Shareholders for dividends, they gave us the opening and the closing. SARS income tax, opening was a liability, which means we owed SARS in the previous year 42,100, but in the current year SARS is owing us 2,600 rand. So we must be careful. We must be careful with this one, right? We must be careful with this one. So I did talk about it before, where there's an opening balance of which is a liability, and the closing balance, which is an asset. If it's like this, both of them, opening, which means the balance brought down and the balance carried down, they will be on the same side. I don't know whether debit or credit. That's what we're going to discuss. But if the other one is credit, the other one is debit, which means both of them has to be on one side, right? Whether it's debit or it's a credit, but the direction will be given with this one. If this one is credit, which means both of them will be on the credit side, you need to look at the opening balance. Since the opening balance is credit, which means opening, the balance brought down and the balance carried down, both of them will be on the credit side. But if the opening was debit, which means balance brought down and balance carried down, both of them will be on the debit side. That the opening balance is the one that gives you a direction. Okay, you will see when we do that. Share capital, 1,250,000 shares on hand on 1 March 2022. These are the shares that have been in issue at the beginning. And then 180,000 shares repurchased on 1 May 2022. They do not qualify for dividends, which is an interim dividends plus the final. An EFT of 1,989,000 rands was issued for the repurchase. So which means now these 180,000 shares, we bought them by an amount of 1,989,000 rands. This is the price we purchased with. And then shares issued on 1 October 2022 at 11.40 rand per share. We don't know the number of shares that have been issued, but we can be able to calculate that. 1,370,000 shares on hand on 28 February 2023. So which means I can be able to work backward to get how many shares that were issued. And then since the question was asking us to calculate the proceeds from shares issued, it will be easy for us. That's why they're saying it's 3 marks, because there's nothing much you need to do there. You need to work out the number of shares that have been issued, you multiply it by 11.40, then we're done. I hope you guys can see how simple and straightforward this question is. It's very easy. Okay. Uh, 1,370,000 shares on hand on 28 February 2023. 1,370,000 shares on hand on 28 February 2023. And then we have dividends here. An interim dividend of 32 cents per share was paid on 31 August 2022. A final dividend was declared on 28 February 2023. So this is the information we have there, guys, that we need to work on right now. And I think after that, we will be sorted with everything. Okay. I think after that, we'll be sorted. So let's start with the retained income note here and finalize it quickly. Retained income note first, balance at the beginning of the year. So we need to go and check how much is our balance at the beginning of the year. If we look here, retained income on the extract from the statement of financial position, they did give us a balance at the beginning, which is 237,400 rands, 237,400 rands. Okay. And then the net profits after tax, how much is that? Did they give us the net profit after tax? Definitely, it was provided. How much is it? That is 1,526,000 rand. So we just need to take this amount and put it there. 1,526,000 rand. You can see, like, you just moving here. There's nothing much that is going to be a problem for you. Buyback of shares. Buyback of shares or shares repurchased. So we need to calculate the amount that will go to the cash flow. Always when there is buyback of shares, I want you guys to start with the journal entry that we've always been talking about, right? The journal entry that we've always been talking about. That journal entry is very important. That journal entry is very important. Okay. Shares repurchased, because it gives you the amount that will go to ordinary share capital note, it gives you the amount that will go to retained income note, and it gives you the amount that will go to the cash flow statement. So what we debit ordinary share capital. We debit ordinary share capital, and then we debit retained income. And then what do we credit? We credit bank. So this is our journal entry that we're going to process. This is our journal entries that we're going to process. Okay, and I'm going to have my debit, and I'm going to have my credits this side. So I just need to get the amount now so that I can. I just need to get the amount now so that I can see how do I deal with a transaction like this. Okay. Okay, let's see, guys. Number one, the first thing that we have here, if we go to the shares that were repurchased, they said 180,000 shares repurchased on 1 May 2022. They do not qualify for dividends. An EFT of 1,989,000 was issued for the repurchase of the shares. So how much did we buy back for per share? If we take this 1,989,000 divided by 180,000 rands, how much did we pay for one share? How much did we pay for one share?
R11.05.
11 rand 5 cents, 11 rand 5 cents. So that 11 rand 5 cents will go to the bank, because that is the amount of money that will come from our bank account. Okay. Then now, ordinary share capital, we must never forget that under ordinary share capital, it has to be an average. It has to be an average. This one, how did we calculate it? We said 1,989,000 divided by 180. 1,989,000 divided by 180,000 rands. That's how we got that. That's how we got this 11.05 rand. But now, when it comes to ordinary share capital, we must not forget that we need an average. Ordinary share capital, we need an average. And obviously, this average will be calculated using the shares on hand on 1 March 2022, because immediately after that, we bought back the shares. So, which means I need to go and take my share capital at the beginning, which is 12,312,500 divided by 1,250,000. 12,312,000 rands. 12,312,000 rands. And then I say divided by how many shares that I have? 1,250,000 shares. So how much am I going to get? My average.
9.85.
R9.85 now. R9.85. Okay. Then now the difference between the two, it is definitely going to be my retained income. Okay. I hope you guys can see
Sir.
Yes.
Yeah, ubhala 12,312,000 kuphela. It's 12,312,500.
12,312,500. Oh, okay. Thank you here. Okay, thank you for that. 12,312,500. Okay, so I need to put 500 here, but we're still getting the same R9.85, no? Is it still gonna be the same, Kinelwe, if you change
Yeah.
there? Or
Yeah,
you
it's
use the 500. Okay, thank you. Thank you on that. And then we've retained income. So this is our journal entry, guys. Remember, these are the amounts per share. If you want, you can use the full amount, which means you're gonna put the 1 million here, and then you can just use the full amounts. But now remember, those full amounts will be based on the number of shares that have been purchased, which is now going to be 180,000 shares. Okay, let's go to our retained income note now. Let's go to our retained income note now. How many shares that were repurchased here? It's 180,000 rand. So which means I'm going to say 180,000 rand shares multiplied by which amount I'm going to use here? The one of retained income, because I'm doing retained income notes there. So which means I'm going to use the R1.20. So here I will say multiply by R1.20, and then how much am I going to get? How much are we getting if we multiply the
116,000.
116,000?
216,000.
216, né?
Yeah.
Okay, thank you. Now, dividends on ordinary shares, we know that we need to talk about, okay, this one has to be negative because it's a buyback of shares. We know that interim dividends and final dividends, that's what we need to talk about now. Interim dividends and the final dividends. Let's go and check which one we're going to get first. Which one can we get here? Interim dividends, we know how to get the interim dividends. Final dividends, we know how to get the final dividends. Let's talk about the interim dividends first, or we can talk about the final. Shoulders for dividends, this one is final, eh? Am I right on that? 575,400. The shoulders for dividends at the end will always be our final dividends. 575,400. Okay, 575,400. You can see how easy it is to get your final dividends. But interim dividends as well, it's not difficult, because if you go to our information, they said here an interim dividend of 32 cents per share was paid on 31 August. On 31 August, which means after we've bought back the shares, and they did tell us that these shares did not qualify. They do not qualify for dividends. So on how many number of shares are we going to multiply. How many number of shares are we going to multiply with 32 cents?
1,250,000.
1,250,000. Why are we saying that? Why is it 1 million?
Yeah,
Yes.
they're the only shares that qualify for dividends.
Yes, but remember, you are right on that. But they're saying here they do not qualify. These 180,000, remember, they included in that 1,250,000, and they're saying they do not qualify for dividends, which means we need to take them out. And if we use the full 1,250,000, it's going to be a problem because included in that 1,250,000 is 180,000 shares, and those that do not qualify. So we need to remove them first from the 1,250,000.
Yeah,
Then
talk about 1,070,000.
1,070,000 rand. Okay, yes,
Yeah.
that's the amount that we need to use. So, which means how am I going to do that? I need to say 1,250,000 minus 180,000 rands, right? And then multiply by 32 cents. Okay. Yeah, multiply by the 32 cents as they provided here. And then how much are we getting? It's our interim dividends.
324,400.
324,400, yeah? Like this. Getting
It's 342. Yeah.
342,400. Okay. So this is our interim dividends. Okay? This is our interim dividends plus the final dividends. Okay, guys. In total, they're giving us 917,000 rands. And then our balance, I'm going to add all these. And then I'm getting how much? 629,600 if I'm adding only the amount at the top. 237,400, which is the balance at the beginning, plus 1,526,000, which is the net profit after tax, minus 216,000, which is the buyback of shares, minus 917,800, which is dividends on ordinary shares. Then I get the total 629,600 rands. Okay. Then the change in loan, which we said here, it's going to be very simple and straightforward to work on it. 7,200,000, and then it moved to 6,348,000. So is this an inflow or an outflow of cash? 7,200,000 minus. Sorry, come again.
It's an outflow.
It's an outflow of cash. Yes. Why are you saying that? It's because the loan decreased, which means we paid some of the amount. Very good on that. 6,348,000. Okay, 6,348,000 rands. How much are we getting here as our difference, the movement? Which is our movement? Come, guys.
$852,000.
852,000 rands. Thank you on that. Okay, so this is our change in loan, which is going to be, we said it is going to be an outflow. So I'm gonna put it on brackets because it indicates an outflow. Proceeds from shares issued. Proceeds from shares issued. How many shares there have been issued here? How are we going to calculate that? How many shares have been issued here? We said we're going to work backward, right? From the total, because we do have the shares at the end. We do have the shares that have been bought back, and then we do have the shares at the beginning. So which means now I can work backward for me to get the shares issued on 1 October, because that's when I need to get my proceeds from shares issued. So what am I going to do here? 1,370,000. This one I have to add it because it is negative. So I will say plus 180, then minus 1,250,000 rand. Then that difference I will say plus, I will say multiply by 11 rand, 11 rand 40. That's what I'm going to do. So 1,370,000 is my total. I'm working backward. Remember, 1,370,000 rands. Then I'll say plus 180,000 rands, and then I say minus, and then I will say minus 1,250,000, which is the shares at the beginning, 1,250,000 rands. And then after that, I'm going to say multiply by. After that, I'm going to say multiply by how much per share? That was 11 rand 40 per share, because I will get the number of shares issued. Okay, let me just do this. Let me just do this. How many shares have been issued from here? How many shares have been issued from here? If I punch my calculator on this one, how much are we going to get?
$300,000.
Thank you. Getting 300,000 shares, which means these are the shares that have been issued. Then I need to say multiply by the 11 rand 40, because they have been issued at 11 rand 40. So I'm going to say 11 rand 40, and then after that I'm going to get how much then. And how much is my total?
3,420,000.
3,420,000 rands. 3,420,000 rands. Thank you on that. Okay. So guys, I hope you can see how we got this one. Very simple and straightforward. Someone is joining. Okay. I didn't see that. Okay, so this is our proceeds from shares issued. This is our proceeds from shares issued, 3,420,000 rands. Then now we move on to the cash flow from operating activities. Let's go and see how we're going to get that. Cash flow from operating activities, it has the cash generated from operations, it has the interest paid, it has the income tax paid, it has the dividends that was paid. The cash generated from operations, we didn't need to calculate, it was already provided from the answer sheet, so we don't need to calculate that. The information for it is not really, we don't have everything that we need. As you can see here, we have total current assets, but we don't know how much receivables, how much the change in inventory, we don't know that. The change in accounts payable, we don't know. The change in receivables, we don't know. So that's the reason why they have to give us this amount already provided. It is actually 2,240,000 rand, 240,300. Sorry, 240,300. Okay. Interest paid, income tax paid, and the dividends paid. Interest paid, let's go and check how much is our interest that was paid here. We do have the interest loan provided, 648,000 rand. This is exactly the amount that we're taking to our interest paid, 648,000 rand. We must not forget that it should be in bracket to indicate that this is an outflow of cash. Income tax paid. Now we're going to deal with the income tax paid. So we need to perform our workings, right? We need to perform our workings. And I did say that our T account, we need to know, we need to make sure that we are able to do our T account for this income tax paid, right? Let's try it and see. Let us try it and see if we can be able to do it. Just gonna do it like this. Okay, so I will have SARS here. SARS income tax. We have debit. We know that we have debit. and we have credits this side. Okay. We need to check whether this is a liability account or it is an asset account. That is the first thing that we need to look at. Let's go and check. Let's go and see what we said there. We said SARS income tax, the opening balance is credit. So which means SARS is owing us in this situation, because it's on the credit side, how much? 42,100 rand. So the opening balance brought down, is equal to how much? 42,100 rand. So that is the amount that I'm going to, record here. 42,100 rand. What is that? That is my balance brought down. And I did say that the balance carried down will also be on the same side if this one becomes an asset now, because at the beginning it was a liability, now it is an asset. So if it's a scenario like this, whether it's a debit at the beginning and it's a credit at the end, or it's a credit at the beginning and a debit at the end, both of them should be on the same side, directed by the opening balance, which means the closing balance will follow the side of the opening balance. Since the opening balance is credit, so it has to be on a credit side, because it's a liability. If it's CR there, it means credit, it means liability, which means this is sitting under current liabilities. So now the balance carried down will be 23,600. On the same side, I'm going to have what? Balance carried down this side, right? Which is how much? 23,600 rands. Okay. And then I always have income tax on my credit side. That one is guaranteed. Income tax will always be here. And then how much is our income tax from the information provided? They gave us the net profit after tax, but income tax, we need to calculate it then. How are we going to get our income tax if we have this information? How much will be our income tax? We know very well. Yes, come.
We would say 30% over 70 to get the income tax.
To get the income tax, very good on that. Yes, we're going to say 1,526,000 because this is already a 70%. And then net profit is 30%. On the net profit, always we refer to a net profit before tax because that's where we calculate tax. Tax is calculated on the net profit before tax. So since this one is a net profit after tax, it's already 70%, this one, because 30% has already been subtracted. So I'm going to say 1,526,000 rand multiplied by 30. 1,526,000 rand multiplied by 30 over 70. And then how much am I getting as my income tax?
654,000.
We are getting 654,000 rand. 654,000 rand. Okay. So this is our income tax, right? So which means now I need to come and put it here. 654,000 rand. It is my income tax. Then now what do I do after this one? Now I need to balance my account. So I need to get my totals and then balance my account. I need to get my totals and then balance my account. Then this side, I'm going to have the bank. So if I add all these amounts, I'm getting how much? 719,700 rands. And then it's going to be the same one this side as well. And then which means now my bank, the amounts that have been paid, the tax that have been paid is how much? 719,700 rands. That is the income tax that should be here. 719,700 rands. This is the income tax paid. So it has to be on the negative side. So which means now my workings will be all these ones. I need to add them all. 1, 2, 3. So I need to say 42,100 plus 654,000 plus 73,000, sorry, 23,600. Okay, and then difference paid now. This is going to give me my 719,700 rands, which is my income tax paid. Yeah? Dividends that have been paid. Let's go back and see. An interim dividend, obviously we know that interim dividend was paid, plus obviously which other dividends we're going to consider here. How are we going to get these ones? How are we going to get this one? Dividends paid, how do we get it?
You use the one from last year.
Yes.
And the interim dividends.
And the interim dividends, yes, definitely. We do have interim dividends already. I think we did calculate it. Interim dividends plus the opening balance of the shareholders for dividends, which is 475,000 plus. So I'm going to have what? 475,000, and then plus the interim dividends. Interim dividends, we got 342,400. 342,400. Okay. And then how much we're getting. Another method, we can still do the T account. I think we can still do the T account for shareholders for dividends. I think we need to also be aware of that, guys, that we can still do the T account so that we can see how we get. Want us to do this one quickly on the T account so that we can let me do it quickly on the T account so that we can maybe see how to get it also on the T account. Okay. Shareholders for dividends, we must have what? My balance brought down obviously on the credit side, and I'm going to have what? My balance carried down. My balance carried down on my debit side. How much is it? Let's go and see. Shareholders for dividends, 475,575, right? 475,000 this side. Okay, and then here is 575,400. Okay. And then here we're going to avoid dividends on ordinary shares here. Dividends on ordinary shares. Dividends on ordinary shares. That's what we did calculate this one. 917,800. That's what I need to put here. 917,800 rands. And then now I need to balance my account. So I'm going to get my credit side, and then will be equal to my debit side. And then this side, I'm going to have what? I'm going to have my bank. And then I will say this minus this and see how much am I getting. 817,400 rands. So it has to be 817,400 rands. And if you punch these two, 475 plus 342, it has to give us how much? 817,400 again. 817,400 if we add these two amounts. Because if I say here is equal to 475,000 plus 342,400. See, we're getting the same 817,400 rands. So this is how we get our dividends paid. Okay, then which means now we're done with our cash flow from operating activities. So we need to get the total. Dividends paid must always be on negative because it's a payment. So the cash flow from operating activities end up being 155,200. That is the total. Now we're going to a current ratio. How do we calculate the current ratio? Current ratio is equal to current assets is to current liabilities, right? Current ratio is equal to current asset is to current liabilities. Current asset is to current liabilities. Okay, this is how we calculate the current ratio. What does the formula mean? What is current ratio? Current ratio, this is where we're comparing our current asset to the current liabilities to check if it's one of the liquidity ratios, this one. It is one of the liquidity ratios where we're checking if we can be able to meet our short-term obligations. Can I use my current asset to pay all my liabilities? Can I use my asset to pay my liabilities? That's what we are checking, right? So our current asset, we need to go and check how much is our current asset and how much is our current liabilities. Let's go and check. 1,479,600 is my current asset. 1,479,600 is 2. 1,479,600 is 2. 822,000 rands. 822,000 rands. Okay. This is our so now if the ratio is like this, we always divide by the number on the right. So 822,000 divided by 822,000, that is going to give me 1. Obviously, ratio will always be like that. It will always be like that. It's going to say is 2 is to 1. Then how much am I going to have on my credit side? What's happening now? How much am I going to have on my left hand side? 1,479,600 divided by 822,000. How much are we getting?
1,8.
1,8 is 2 is to 1. So this will be our ratio. 1,8 is to 1. If you interpret this ratio, are we able to meet our short-term obligations here?
Yes.
Why are you saying that?
Isn't it above 1,5? Is 1,5 the recommended ratio you have to meet the expenses? 1,5 or 2? I'm not sure.
It is actually 2. The norm should be 2 is to 1. It should be 2 is to 1. But even if it's less than that, it's still okay because you can see here 1.8 represent our current asset and then 1 represents our liabilities, which means now for every 1 rand that I'm owing, I have 1.80 available to pay, which means I can pay all my creditors and I'll still be left with 80 cents, right? It's still in a good position, even though it's below the norm, because the norm is 2 is to 1. The norm for current ratio is 2 is to 1. Like that is the norm for current ratio. It has to be like this. But even if it's like this, it is still okay. It is still okay for me because I can still be able to meet my short-term obligations and still be left with 80 cents on top. Net asset value per share. The net asset value per share. What is the net asset value? Net asset value, we must not forget that we are talking about the net asset value. Net asset is what? It's the difference between assets minus liabilities. So it's actually the equity. It is actually the equity. So the net asset value should be is equal to it should be equal to shareholders' equity. Shareholders' equity divided by the number of shares, right? Divided by the number of shares issued. We're talking about shares at the end. Number of issued shares, okay? This is going to give us our net asset value per share, okay? So now let's do the calculation there. Okay. Let's go to our information and see. Shareholders' equity, how much is it? My shareholders' equity, I have my ordinary share capital, which is 13,959,500. 13,959,500. 500. And then I need to say plus. Okay. I need to say plus my retained income. Retained income, I don't know, but we did calculate it, which is 629,600. Okay, 610, 29,600. This is our shareholders' equity. Remember, shareholders' equity is made up of what? It is made up of share capital and the retained income. Those are the two amounts that makes up your shareholders' equity. Number of shares issued at the end. That's what we're talking about. How much? This is 1,370,000 rands. Shares on hand on 28 February 2023. 1,370,000 rands. So I'm going to say 1,370,000 rands here. This is my number of shares. Then how much, guys, am I getting in total? How much am I getting in total as my net asset value per share? Here they were supposed to say net asset value per share. I don't know why they're saying net asset value, because the net asset value here, when we're saying net asset value, we're talking about two things. Ordinary share capital plus retained income. That is the net asset value. But when we say per share, we need to know how much per share. So they needed to say net asset value per share here so that we know what they want us to get. So how much here, guys? If we do punch your calculator here, how much you're getting?
With Livy and Stella and Dad. 14,589,000. I mean 14,589,100. Why did you get chosen?
You mean they're on top, nah?
Yeah.
Okay, so that is my numerator. Please come again. How much you getting? 14,000.
14,589,100.
589,100. Okay. Then we're saying divided by 1,370,000. Okay. Thank you. Then how much we getting here? As our ratio. And so how much is our final amount?
Then is it like a rand value or percent? Oh, it's rand value. 10 rand 65 cents.
10 rand 65 cents. Okay. 10 rand 65. Okay. This is our net asset value per share. You can write it in cents if you want, but for me, I'll just say leave it like this. That is 10 rand 65 cents. If you want to make it into cents, you're gonna multiply it by 100, and then you're gonna get it in cents. Now, ROTCE. What is ROTCE? Return on total capital employed, right? Return on total capital employed. How to get that? That is how to get this one. Return on total capital employed. You need to know the formula. The formula say net profit before tax and interest, right? Net profit before tax and interest. So you need to get the net profit before tax and interest expense. And then after that, you're going to say divided by average capital employed, not total, average capital employed. Okay, this is our this is my formula. Then now my net profit before tax and interest, how am I going to get that? I need to see how I'm going to get the net profit before tax and interest. So which means now I need to take my net profit 1,526,000, right? 1,526,000. And then what do I need to do that? I need to say plus, because tax has already been subtracted here. I need to say plus. How much is the tax? Tax is something that we have already calculated. We said income tax is 654,000 rand. So I need to say plus 654,000 rands. By doing that, I'm going to, this is going to give me profit before tax now. And then interest, I need to say plus interest again, because interest is subtracted from that profit. So which means I need to say plus the 648,000 rands, because that was the interest, 648,000 rands. Then this is going to give me my net profit before tax and interest expense. And then over average capital employed, they gave us that. The average, total average capital employed is 20,343,500. 20,343,500. Okay, this is the average. Then now, how much is our numerator here? How much? Which is the net profit before interest and expense?
2,828,000.
2,828,000 rands. Thank you. 2,828,000 rands. Okay. Then divided by the 20,343,500. 20,343,500, and then is equal to, then how much we're getting there. Okay, guys, another thing that we should not forget, this is like a Roche, right? It must always be on a percentage. So we need to say here multiply by 100 over 1, right? You say multiply by 100 over 1, because this should always be on a percentage. Okay, it should always be on a percentage. We need to say multiply by 100 over 1. Then how much we're going to get then?
%13.9%.
13.9%. 13.9%. Thank you. 13.9%. Not really 9, but 90%. 13.90, but 13.9 is also the same thing. You can round off to the nearest rands, the nearest one decimal place. 90, or you can say 9. You are correct on that. Thank you on that. Okay, this is what they wanted us to do, guys. I don't know, any questions on your side regarding this?
No.
No questions, man. Are you guys okay with the cash flow now, or are you still scared?